Hey everyone, this is Sam Costello, and I am a licensed realtor in New Jersey. I work with Keller City View's Realty 3 group over here in Hasbrouck Heights. And I wanted to come to you today, wanted to start a series of videos where we're going to be talking about purchasing homes, renting homes in the northern New Jersey, Bergen County area specifically. I do serve all different areas of New Jersey, but we're going to focus this series on your first-time home buyers. Let's say you're renting at this time and you are looking to purchase. You want to own your own home, which everybody has that dream, and a lot of people do realize it. It's just that it takes a lot of work and a lot of steps, and it could be frustrating, and at times you're not sure what to do. But if you follow these steps, then you will be better prepared and make it a little bit easier on yourself. So we're going to start with talking about pre-qualification and pre-approvals. Now, they're similar, but they're two separate things. A mortgage pre-qualification can be useful as an estimate of how much someone can afford to spend on a home. But a pre-approval, which is often valid for 60 to 90 days, is more valuable. Now we're going to talk about that. It means the lender has checked the buyer's credit, which would be your credit, verified your assets, and confirmed employment to approve a specific loan amount. Now I'll explain to you why that's a good thing. So pre-qualification is your basic, yes, we got their paperwork and they seem okay. We got bare minimum of information. But a pre-approval is a seal of approval from a lender stating we checked out everything. Now why do you need that? Because that shows you're a serious buyer. And it also does help you too, because let's say you're previously renting. You're already paying somebody's mortgage. It's just not yours. You're paying a mortgage. So what this is going to do is this is going to get you a concrete number that's going to say you could afford this much for a home, and they give you this pre-approval letter with their approval on it. And with that, you could show that to any property that you're looking into and you're serious about, and that'll show this buyer here has done his work and he is ready to go. Him or her, excuse me. So buyers benefit by consulting with a lender, obtaining a pre-approval letter, and discussing loan options and budgeting. The lender will provide the maximum loan amount, which will help set the price range for the home shopper. A mortgage calculator can help buyers estimate the costs. So you're going to go over that with them, with your lender, and you could choose anybody. There's a lot of them out there. We have preferred loan agencies that if you do need help choosing one, I could definitely help you with that. Now, your mortgage pre-approval requires a buyer to complete a mortgage application and provide proof of assets, confirmation of income, good credit, employment verification, and important documentation, which would mean your identification, passport, any type of information that you would have to prove who you are, social security card. Now the pre-approval is based on the buyer's FICO credit score, the debt to income ratio, which is a DTI, and other factors depending on the type of loan that you choose, because there are different kinds. Except for jumbo loans, all loans conform to Fannie Mae and Freddie Mac guidelines. Some loans are designed for low to moderate income home buyers or first-time buyers. Others, such as Veterans Affairs loans, which would be known as VA loans, would require no money down, are for United States veterans and service members. So you could qualify for that too if you meet those guidelines. Number one, you're going to need proof of income. Potential home buyer must provide a W-2 wage statement and tax returns from the past 2 years, current pay stubs, and show income and year-to-date income, and proof of additional income sources such as alimony or bonuses. So it's always best to show whatever paperwork you have as far as income goes right from the start. It'll only help you. Proof of assets. That's number 2. A borrower's bank and investment account statements prove that they have the funds for a required down payment. It's very important. Closing costs and cash reserves. The down payment, expressed as a percentage of the selling price, varies by your loan type. It's also very important. Many loans require the buyer to purchase private mortgage insurance, PMI, if they are not pulling down at least 20% of the purchase price. Now, this is very important. Depending on the type of loan you get, there's different kinds. There's also many different programs that a lot of lenders are putting out there today. So you could buy a home for as little as 3% to 5%, but it all depends on what type of loan you get. There's conventional, variable rate, veterans, FHA, all different kinds, and there's all different programs out there. Number 3, good credit. Most lenders require a FICO score of 620 or higher to approve a conventional loan, or 580 for a Federal Housing Administration loan, that's FHA. Lenders typically reserve the lowest interest rates for customers with a credit score of 760 or higher. Now that all is variable depending on your lender, depending on what bank you're working with. This could all be slightly different, but the guideline here is the better the credit, the better rate you will get, and all depending on which type of loan you get. Number 4, verification of employment. Lenders not only verify employment through a buyer's pay stubs, but will likely call the employer to confirm a borrower's employment and salary. They will verify this. Self-employed buyers provide additional information such as the stability of the borrower's income, the location and nature of the business, the financial strength of the business, and the ability of the business to continue generating and distributing sufficient income to enable the borrower to make the payments on the mortgage. So it's very important that you're honest from the start. Provide any and all kinds of verification of employment, meaning your W-2s, your pay stubs, your tax papers, whatever you have available, provide that to the lender. It only makes things easier. If you are self-employed, you would have to provide any type of information for your business. I believe a 1099 or a 1040 from your tax paperwork, anything from your accountant that would show how much money you make year over year. Any other documentation, this is the 5th one, any other documentation would be included would be personal documents and identification required for pre-approval includes the borrower's driver's license, social security number, we went through this before, and the authorization to allow the lender to pull a credit report, which they will have you sign something that will allow them to check your credit. Now, once you get through all these things, you send it over to them, and then what the lender's going to do is they're going to verify everything, and then they're going to come to you and they're going to say, hey, you have this much down that you could put, you have this amount of money, which is fine for you. You want to get to that amount, which is the home you're looking for. Now, this helps you. The reason this helps you is we could be looking at many different homes for you. You could be looking at many different properties, but it might be over what you could possibly afford at that time, what the lender will allow you to borrow. So instead of going out there and seeing 50 homes at $1.5 million when your lender's approving you for $1 million, and you're looking at these homes and you want to put in offers, and then when you do put an offer without a pre-approval, and then it comes back to them and they say, no, you cannot afford this home, it's only going to break your heart. And I don't want that to happen to you. So it's always best to get a pre-approval once you start seriously looking for a home. And it only helps you because it shows you the guidelines of what you could afford, what you can go out there and look for, and then when you're ready to put the offer in, it shows the seller and their agent that this guy is serious, this person is serious, and they've already been through the pre-approval process. To finalize everything, to finish this up, it's always best to have a pre-approval. Now, if you need anybody to help with that, we do have many different lenders, like I said, that we work with, and it could help you get this done within a day, sometimes a couple hours. And it only takes a 15-minute phone call or a text message or email. And it's always best to do it at the start, right when you start looking for homes. Now, this also is the same thing for multifamily, same thing for mixed-use properties. It only helps. If you are looking for anything or you need any more information, I'm around. You could reach me. I'm on all social media. I'm on Instagram, TikTok, Facebook, YouTube, like you see me here. And if you have any questions, message me down below. If you'd also like and subscribe, I would like to be on here making videos at least twice a week. But I wanted to let you guys know I'm around, and have a great day. Thanks for watching.